The coronavirus has had a major impact across global markets around the world. We've seen $3 trillion wiped off of equity markets in the space of a week. The Dow Jones suffered its biggest one-day points decline in its history. The S&P, the biggest points decline since 2011. And just to put it into context, the FTSE 100 on Friday was down by about 3.5%. If you compare that to how much it was down on the day that Lehman Brothers went into administration, filed for Chapter 11 at the height of the financial crisis back in 2008, FTSE was down by about 3.8%. So it's really not that different. We're seeing major moves to the downside across global markets. It's interesting timing that this economic shock has happened now. We've been in a bull market for over 10 years now. The markets have been reaching fresh all-time highs over the past couple of years, and the underlying global economy is relatively strong. This coronavirus came as a shock, or a so-called black swan event, which meant that it was totally unexpected, and it's actually grown more quickly than people were anticipating. This week, we saw cases outside of mainland China take over from cases within mainland China, and that was a really key development, and that's part of the reason why we've seen this major sell-off. A lot of global equity markets now in correction territory, which means that it's more than 10% below its recent high. When we put the shock today into context of, say, the financial crisis back in 2008, equity markets are still about 85% below that trough. That trough back then in the markets led to a recession in 2009. The base case among global economists is that this won't lead to a global recession, which essentially means 2 quarters of negative growth, but we'll have to wait and see. Certainly in terms of the markets, this is one of the biggest moves we've seen in a very long time. The question now is whether that has a real impact on the global economy. In terms of how the coronavirus is impacting supply chains, we've just come through earnings season, and we've heard from a number of big corporates. Apple is one notable one that said that it's unlikely to meet its sales guidance for this quarter, and that's because of major disruptions to its supply chain. Similarly, with Microsoft, it says that its PC sales are likely to be heavily impacted because of disruptions to the supply chains. Also in terms of the European car industry, because we've heard from some Italian auto parts makers that have said that they're having disruptions to their supply chains. We are yet to hear from the likes of VW and BMW and Daimler to quantify the impact, but certainly that is another potential area in which the supply chain could be impacted. Also, Coca-Cola said that some of its sweeteners have been affected, so products like Diet Coke that require aspartame could see shortages in other places around the world. The travel and leisure sector has been one of the hardest hit when it comes to the market impact of the coronavirus. Just today, we've heard from IAG, which is the parent company of British Airways. Its shares are down by around 7%. It had its earnings today, which were okay, but it said that this year it's unlikely to make its 2020 profit guidance, and that's because of major flight disruptions. We know there are lots of flight disruptions in and out of mainland China, and it looks like those could be extended to parts of Europe like Italy, which have been hardest hit by the virus so far. Some countries could be better prepared for an economic shock around the coronavirus than others. For example, the United States has a very, very strong economic backdrop. Its unemployment rate is very low, and its economic growth is pretty strong as well, 2.1%, still below Trump's target for 3%, but decent economic backdrop that it's got to support its economy. Some of those weaker economies might look set to suffer. Also, it's likely that the countries that are hardest hit by the coronavirus, the likes of Italy or Iran, are the most exposed. There's a lot of pressure now on the governments to come up with a response. There's been a lot of focus in financial markets on its monetary policy decision-making body, the Fed. It's likely to cut interest rates in order to stimulate the economy next month. So far, it has been keeping interest rates on hold for some time now. Given that there is this unknown, unexpected shock from the coronavirus, we could see interest rates move lower in order to support the demand side of the economy. The coronavirus is likely to have a major impact on the Chinese economy. For example, we've seen the prices of food absolutely surge, and that's likely to lead to inflation, which is a problem that no economy wants.